Welcome back, everyone. This is Thomas Triple T Tie with another new bullish crypto analysis. Before we dig in and take a look at the Bitcoin daily analysis, remember this is for edutainment only and not to be considered as financial advice. Also, when you feel like value's been added, feel free to smash the like, ring my bell, hit subscribe because it really helps the algorithm to promote the videos for other, especially newbies, to help prevent them from FOMOing and getting to know the crypto market a little bit better. So with that, let's dig into the news first, and then we'll look at the charts and do some analysis. There was an article in Yahoo Finance stating why Bitcoin could be poised to fall further, and they cited a couple reasons. Let's take a look here. First of all, they cited that Bitcoin's volatility lately. Well, that's nothing new, but with the Fed's inflation, the concerns about the correlation with risky technology stocks. So nothing new. The only thing I could say is that it's anybody's guess. It really is. Like currently, there is correlation with the Nasdaq and the S&P 500, but it varies. It varies. So it's I'll include the links in the tweet chain for you to check out. But it's nothing new. But anyways. Let's move on to the next one, which is more interesting. Bitcoin's an article in CNBC News talks about Bitcoin tribalism is holding the crypto industry back, and this is according to Ripple CEO. I agree. I agree with this. What's this guy's name? Garen House. He used to be an executive for Yahoo, and he's now the CEO of Ripple. I'm gonna save my opinions about Ripple, their company and their XRP and all that stuff. But I'm rooting for them to win against the SEC. Let's just put it that way. But outside of that, I just don't have a very favorable opinion of the company themselves. However, I do agree with what he says. For the longest time, I was not a part of crypto Twitter or anything social media that. And I just did my own thing. But when I entered the crypto space, crypto Twitter especially, I noticed the very strong tribalism, especially with Bitcoin maxis. And Mr. Garlinghouse talked about that, how the polarization of certain groups within the crypto space is not helping with especially influencing the politicians and also working together for a common cause. Oftentimes people are just, Bitcoin's the greatest or Ethereum's the greatest. It's not about that. It's an ecosystem. It's about a new way of personal financial freedom for people. And when people get back to the fundamentals, I think that will help. So yeah, on this point, I totally agree with him. Another article in Barron, they talked about Bitcoin-backed mortgages are coming, and they stated they talked about one company in particular that Milo is the company. It's a startup, and they're offering 30-year mortgages backed by cryptocurrencies, and this was starting in March, and what all this means is that traditionally you have to be able to prove your income and to be able to pay back the loan, etc. But what some of these companies, in particular Milo, is doing is saying, let's say that you just have a different way of doing things, or maybe you don't want to live by the 9 to 5 culture, and you invest in Bitcoin, but you're super wealthy in Bitcoin and crypto, but you just don't have the traditional income that people look for when they're qualifying for mortgages, etc. So what you can do now is to be able to say, hey, I have, this bag of Bitcoin is worth this much. And so they use that as a way to help you qualify for these mortgages. I would caution though, because of the volatility with crypto, as you can see, 50, 60 market drop, and so for some altcoins even, it drops even more. So be careful about this. I think if you know what you're doing and you're well versed in the crypto space, yeah, it could be good for you or beneficial for you. But if you are not well versed and are new at this, I would stay away from like Bitcoin-backed mortgages, because if they're using that to qualify you, and if the market dropped by 50%, then you may no longer qualify. You may need to come up with additional capital to back up that mortgage loan, and you could be in deep trouble. So be really careful about that. So that wraps up the news. Let's dive into what is that? Oop, that's not what I want. Let's go to, that's what I want. Here we go. So here's the current or recent market cap, and crypto heat map. Bitcoin, it was more red earlier than now. So I'm glad to see some of these coins turning green. Bitcoin turned green from earlier this morning. It's now at 41.5. Dominance 41.12. Ethereum still red, around 3K. Dominance 19.35. Luna still green. FTM just turned green in the afternoon here in the Pacific Coast. And so overall, it's turning more green, but still predominantly red. Let's take a look at the market cap. 1.92 trillion, still the same as this morning, 1.57% up. And let's see which one grew in market cap today. We got Bitcoin grew in market cap, Ethereum, Tethered UST, Binance, USDC. It's pretty flat. XRP increase, Solana increase, Terra increase, decent amount, 5.29, and Cardano also increased a little bit. Avalanche increase. I mean, we got a lot of growth here in the market cap. In the top 17, only 3: Binance USD, Terra USD, and USDC are the only ones in red on the 24-hour market cap. So overall, the top quality coins are growing. Not all of them are quality, but the top coins. Let's put it that way. All right, here's the trading view chart for the daily. Let's review what I said yesterday in my analysis. Yesterday, I mentioned that the BTC would chop between 41K and 42K, and it did pretty much. It did do pretty much that. It ended up chopping just within. It ended up chopping as it printed the third bullish. It's not quite bullish. It keeps flipping back between red and white here. So bullish and bearish keep flipping back. If you wait like 30 minutes, it'll turn again. But anyways, it went from like a low of 40.9, which is pretty close to 41, and a high of 42.2, pretty close to 42. So the analysis was right on there. And what I'm working to do, if you haven't seen the previous video, is to see if Bitcoin would follow this trajectory on the daily basis, this arrow, the bounce here. Because I've noticed that in the past, it travels inside this ascending channel. Here's the resistance on the ascending channel. Here's the support on the ascending channel. And it chops up and down in that range. So it hit the bottom here. My question is it going to bounce back up? And how far will it bounce back up? Is it going to go to this ascending triangle resistance, or all the way up here to the ascending channel resistance? So so far it's following this bounce line that's been in here. So that's pretty cool. What also happened is that it wicked just above the 50-day moving average here, and that is around 50-day moving average. Where is that? That's around 42.1K, and it wicked just above that and dropped, pull back down. So it couldn't break through it and sustain a break above that. Additionally, notice the 50-day moving average is also starting to descend. It's been ascending for the longest time, and just the past 2 days started to descend, curve down. The same thing's happening with the Bollinger basis, or the middle line. It's descending, and soon they're all going to collide somewhere here, intersect. The bull market support band, this grayish ribbon here, is also descending, and that range is roughly around 42.8 to 43.6. So 42.8 here, 43.6 here, that gray ribbon. So that's going to drop down to somewhere here. And the middle basis line is currently at 42.5, which happens to be where this resistance line is right here, this reddish dash line here. So really interesting intersection that's coming up here in the next day or two. They're all going to collide, and we'll see if Bitcoin can break above that, or will it stay below, especially if they're descending. Sooner or later, they're going to intersect. And with that pressure, push it down, or would it break above? Let's see, trading volume around this range here. You see how it got really thin here on the candle? It's going to turn red pretty soon. Anyways, so the trading volume for this price level up here, its average is about right here, and up in this area, it's just slightly below average. But if it stays right around here, that's around average. The highest trading volume price level is down here at around 39. Yeah, at around 38.7K. So something to keep in mind. So right now the candle is closer, just under the middle Bollinger basis line, and further away from the bottom, which is roughly around 37.8K right here. So nearest resistance would be the 42.5K, and in addition to the Bollinger basis, the bull market support band, and also the 50-day moving average. Those are all resistance. Nearest support is this green dash line here at 41K. So let's drop down and take a look at some indicators. But before we do that, let's take a look at the volume. Volume here is back above the, just barely above the moving average. So that's positive sign. And down below, the white J line of the KDJ registered at 91, and that's in the upper range of the KDJ. The upper range starts at 80, so it's in the upper range. So what does that mean? It means that in the next few days, it's probably going to either rise up some more or round off and start curving back down, like it did here, 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 and here. Reach near the top, curves down, right there. So I gave that a bull for now. Down here in the MACD, the white MACD line rounded the bottom, started turning back up, and is so closely touching the red signal line right now. And it's registering at negative 691 when I prepared this chart. And it printed the 17th consecutive bearish, shorter histogram bar. So it's rounding up, and sooner if the white line penetrates the red line and goes above, the histogram bars here will turn white or whitish. So for now, it's bearish pattern, but bullish trending. Down here, the red RSI line crabbed sideways from the previous day at 47.2. So I gave that a crab. The blue CVD line here has been behaving really odd. While I was preparing this chart and this analysis, this CVD line kept flipping back up and down, up and down. It kept doing that as this candle changed from red to to white. Super strange. So it was registering at 1.814 million. So I gave that a crap because it kept flipping up and down. The white momentum indicator down here, that tracks momentum. It continues to trend up, but much less of a slope. So if you look back here, it's choppy, but overall it's trending up. Currently at negative 691, I gave that a bull. So what does all this tell us? All this tells us the conclusion. The conclusion is BTC is likely to chop between 41 and 42K, similar to what I said yesterday. Intraday with strong downward pressure from the three descending trend lines, 50-day moving average, the bull market support band, and the Bollinger Band basis. So yeah, it's gonna do similar to what I predicted yesterday, but the pressure from these trend lines will be interesting to pay attention to. For max pain, 421 will be 41K, 422 will be 42K, the 29th is 42K, and 5/6, May the 6th, will be 40K. So it's going to range between 41 and 42 in the meantime for the rest of the month. And then in early May, it may drop back down to low 40s according to options max pain. But that really depends on volume and open interest. So let's take a look at that. But before we do, my rating for this chart is crab and a bull. It's going to crab within a range and with bullish tendencies, meaning it's going to go slightly up. That's my prediction. And so far, 3 days in a row, it has followed this bounce line, which is pretty cool. So let's dig into the rest. Here's just to show you proof of the max pain prices, 41, 42, 42, 40. And here's where we want to take a look at those specific dates and see how volume and open interest registered. So on the 21st and 22nd, 21st, not a lot of volume, barely any open interest. And volume are contracts that have been filled. Open interest are contracts that are pending and not filled. So volume on the 21st is small. For open interest is like non-existent. For the 22nd, it's still on the low end. And for open interest is low. For the 29th, volume is just above 1K here for both calls and puts. And for the open interest, it's for calls is above 20K, and for the puts it's just under 20K. So the 29th would be a more interesting day to observe as far as max pain. So max pain probably will trend towards where it's predicting. And if we look back here on the 29th, that's around 42K. So good information for you to trade the ranges. I forgot to cover prices, entry prices. So let me do that. I always forget for Bitcoin. I don't know why. So entry prices for you. Let me move the chart out of the way here. Remain the same. Again, not financial advice, just edutainment only here. 39.6K, that would be a FOMO of 5%. 39K, 5%. 37.5, 10%. 35K, 20%. 32K, 30%. And 30K, 25%. And 25K at 10%. Yeah, I remembered. And all these will be listed in the in my Twitter. There's usually a copy of it. So let's go to we did all those already. Let's look at the heat map. Again, heat map, buy sell walls on the top, buy walls on the bottom. If you don't know what those things are, feel free to check out the links in my description, and it'll help you. So sell wall, again, still at 50 here, 50K. And another one that just popped up here at around 43K. Down below, we have buy walls. We have one at around 38K. That's getting lighter, meaning they're getting smaller. It was more red here. and then as price moved up, it turned yellow. And as you can see from the gradient here, yellow is towards it's less than red, so and orange, and that just means that the size is again smaller. 35K, there's a buy wall there. 30K buy wall, 25K buy wall, 20K buy wall. So hope that helps. Something you might want to pay attention to is this CVD, and CVD pretty much describes the aggressive buys and sells. When it's red, it means that they're aggressive sells. So over here, since for most of the April the 20th, it's been aggressive sells, signified by this red trending down line here. And you can see by the meter over here, the further down it goes here, the more aggressive the sells are. And those sells are market sells, like not market sells that I'm going to sell it right now at this market price, not limit sells, like where I'm going to put in this price and I'm waiting until it hits that price. That's different. These are aggressive sell now orders. So it's been trending down and more aggressive on sells than buys. Let's look at the liquidation levels here for Bitcoin. If you don't know what this is, again, check out the link. Get yourself some information there. And cumulative liquidation levels delta current right here, you can see it's more greens here at 3.19. Yeah, make it 3.2 billion dollars excess high leverage longs versus shorts. What does that mean? This only measures 25x to 100x, so crazy high high leverage. Don't do it kind of leverage. So you take these long levels here and all the money in those long levels, you minus all the money in the short levels here. Again, that's 25 to 100x. The difference in that money is this green blob here. And you notice that as price dropped here, it liquidated some of those longs, but there's still a lot more longs, money in longs than in shorts. That's all it means. At this level, it's not going to impact the direction of the price movement. Usually around 8, 9, 10, 11, 12 billion dollars. That's when someone would take a counter position and might influence the spot market to drive price down to liquidate the longs, but not at 3 billion. And we're back at the beginning. Keep maximizing that out. I hope this was helpful for you, and if it was, or you found it entertaining, feel free to help out and get the YouTube or algorithms to spread this analysis and other analysis. And smash the like, ring my bell, hit subscribe if you haven't, and share your thoughts in the comment section. I'll see you in the next video. I have one left for today, and that's AVAX. So see you then. Peace.